welcome to our masterclass today. We're going to be looking at the Brixx and Crunch integration. As the title says, it is a forecasting integration that we have recently launched and partnered with Brixx for. And I have to say, it's a very, very exciting integration. It's something that we certainly hope is going to help you with your future planning, your business modeling, etc. So I'll quickly introduce myself and my guest, Michael. So my name's Luke Young. I've been with Crunch now for either just under or just over 7 years. I'm one of the client education specialists here. I look after our help center, our support articles. I also do series on YouTube and things. Some of you may or may not have seen those. And I'm going to be talking to you today about how to set Brixx up, how to get the most out of it, and actually Michael and I will discuss what this could mean for you and why you should really consider using something like this, especially given times at the moment where things are unclear. You really need to start having a sort of a better understanding of your finances, where they're going, what you're going to be looking at making or perhaps spending in the months to come. I'm joined by Michael. He is our FCCA Technical Services Manager. He's been with Crunch for a number of years now. Apologies, Michael, I can't remember how long exactly because it's been a while.
It's been almost 6 years now.
6 years as well. Okay, so we're in the same boat in that respect then. That's good. And I wanted to give you a very quick introduction to what Brixx is. So some of you may have seen the sort of promotional materials we've been sending out, introducing Brixx, what it is and what it does. So I've got this slide here for you, which you can read. Now, I will send out the slides afterwards, so I'm not going to bore you to death by reading every point here, so read at your own leisure. But effectively, like I said at the start, Brixx is a forecasting piece of software that you will use to plan future finances. You can use it to compare your incoming and outgoings. You'll know how much cash you've got left after that as well. Now, Michael will be able to explain better than I. What, in your opinion, is this really for? What could you use something like this for your business?
There's a wide range of things you can use it for, but I would probably be looking at Crunch clients at the moment. One of the things we actually do use it for is, let's say, referencing. Clients sometimes have their lenders, or let's say it might be estate agents and the rest, asking for a projection of their income and the rest. So this basically is going to be a fantastic tool for that. We've also got, as you said earlier on, comparing actuals versus forecast as well. So that's to see how what the business is doing. For those who probably might have a bit more of a profitable business, and then let's just say you might have others interested in your business and then want to probably buy it as well, this is also used for valuation of companies. There's one valuation method called free cash flow method anyway, and that basically looks at, let's just say, how much, or let's say, or your projected sales and the rest, and then they then factor in discount rates and the rest to probably work out what the figure should be. Then also, if you wanted to, let's say, look at a project, maybe you've got a business proposal and the rest, you're going to get X amount and the rest. This can also be used once they bring in what we call a discount factor to work out what the net present values or figures are, to work out whether it is a viable business to go into or not. Because you might basically be told that, okay, you'll be earning X amount into the future, but then if you factor in things like inflation and the rest, is it basically worthwhile? So these are some of the things you could use it for, but then it's got a wide range of use anyway, depending on the business you are doing. Okay?
There's the basic rub of what Brixx will do for you and how you could use it. Now, I'm going to quickly jump into the integration itself. So how do you actually get Brixx? Now, all you need to do, of course, is have your Crunch account. You would then go down to the add-on section, scroll down, and you'll see this tile here, Brixx. Now, you press Start Forecasting. this will take you through to this splash page here, and you simply press login, and then you pop your details in there. Now, once you get past this stage, it will ask you to authorize the synchronization between your Crunch account and Brixx. So go ahead and do that. What will then happen is an automated import. So all of the data that exists currently in your Crunch account. So if we did this today, it's going to take the last 12 months of that data and bring it through into Brixx for me. So what this essentially does is it creates a blueprint. So it will take your client list, your expenses, and it's going to import that into Brixx for you. Now, depending on how much data you have, of course, the time's going to vary, but do bear with it. It will tell you that it's importing, and it will give you sort of loading wheel, and it will just, it will let it do its thing. Now, I'm not going to do that now because the account I've got does have a fair amount of data, and I don't want to waste your time waiting for the import to happen. So here's one that is oven ready, and one that I did earlier. Now, once that data import is finished, you're going to see something like this. Okay, so I'm going to walk you through each of the sections from the very basic, the menus at the top, to the sections and groupings down here, and of course the dashboard. Now, yours will of course look different but similar in respects that you're going to have your cash flow chart here. So you're going to see all of the expenditure that you have, as well as any income that you've got as well. Like I say, this is a blueprint. So of course, at the moment we're in September, so I haven't earned anything yet. So all it's done is blueprinted everything for expenditure from the last 12 months. So it's taken the last 12 months and imported it in here. Underneath this, you've got your cost breakdowns. So these are your expenses, so operating costs, staff costs, for example. So that's things like your salary if you're taking a director's salary. And you've got things like total assets and break even. Now, Michael, what could you potentially use things like your assets and break even charts for? So for instance, what would be the key differences here to look at between things like cash, inventory, accounts receivable, and so on?
Yeah, I think going back to basics, it's more about just saying that cash is always king anyway. When you're running a business, you obviously need to make sure that you've got enough, let's say, cash to pay off debts that they fall due anyway. And it depends on how liquid your business is. So if you think about cash now, I mean, you could easily just pay off a debt when it comes true, but think about stock. Stock basically needs to be sold off before you can then have the cash and then pay off your debts and the rest. So we talk about whether things are actually easier to convert to cash or not. So that's why it's good to know about these things as well. Now, things like assets as well could be used to generate growth in the business and revenue. So you could imagine someone probably purchasing, let's say, an equipment or something. That equipment then is probably, let's just say, if it's a machine or something, that churns out the products and the rest. That is basically all for growth and the rest. So it's good to know about these things, which if push comes to shove, and then let's just say you were in trouble or something, you would effectively have to dispose of to pay off your debts. Okay. So that is what, when it comes to accounting ratios, there are two ratios that basically deal with converting, or it's called, it's about liquidity. How easy is it to convert assets into cash? Okay. And we've got an asset test and then the quick ratio anyway. But that's the reason for knowing some of these things as well.
Perfect. And of course, with break even, correct me if I'm wrong here, but this is basically just looking at things like your income against your outgoings and knowing at which point you've either started earning more than you're spending out, so that would be your break even point. And then of course you want to obviously go past that to start actually having it as income. Is that right?
Yes, it's quite important for businesses at least to be breaking even. No one wants to be making losses. Don't take it the wrong way. Losses can sometimes be good because they could also reduce the amount of corporation tax, or let's say whatever taxes you need to pay and the rest. But ideally, you want to be at a break-even point where you're basically at least covering your costs or doing better than that, and then you can probably enjoy a bit more by having, let's say, dividends or other getting something out of the business you've invested your life and soul into. Yeah.
Perfect. I mean, so that explanation there was just to help you understand how visually Brixx can really put things in front of you. You know, if you use Crunch at the moment, of course, it's a very, very good system for recording and bookkeeping and things like that. But actually to have something visual rather than looking in the back end and looking at reports, numbers and things like that, it's really, really easy for you to understand, you know, if this is going down and this isn't going up, something needs to change. And as I say, with future planning, especially given the circumstances at the moment, you know, nobody knows really what's going on. This tool can be super, super helpful in helping you make those sort of decisions. You know, do I need to reduce the amount that I'm spending out? Will that help me break even if I'm not already? Could it perhaps increase the amount of profit that I'm getting? And likewise with your sales, you know, perhaps you need to increase the cost of some of your services if you find that actually your outgoings are too high, but you can't reduce them. Consider having a look at increasing the cost of your services. So, you know, this is something that I think for Crunch especially, we're super, super excited about. You know, as a business that's always after helping clients as best we can, we want people to succeed. This just really hand in hand goes so well with what we're trying to do. And you know, the best part about this is it's free. So there is, with Brixx, you can get this version of Brixx completely free. You just do the integration. As I say, you go to the add-ons, you import your data, and it's free to use for however long you want. There are, of course, paid for services which offer more with regards to things like tax calculations. You can get more reporting functions as well. Now, I'm not going to turn this into a selling thing, but just to make you aware, the version that we are using at the moment is going to be free, just so that you've all got the same options. You've all got the same features while we move through this session. So now that we've explained a little bit about, you know, the visual ideas behind this, you know, your cash flow, your breakdowns, your assets, your break evens, etc. Let's go into some of the nitty gritties in terms of actually getting this set up and you using it for your own business. Now, this is, of course, my demo business. You know, as we can see on the left, we've got our sales, which of course is our income. We've got our operating costs, which are our expenses, and then we have our employees. Now, employees for limited companies, generally speaking, if it's, you know, if you don't have employees per se, but you are directors, you would still go down as an employee on this section here to account for things like your salaries, even if it's at the national insurance threshold. Sole traders, you could also still use this if you want to differentiate between your expenses and what you're actually paying yourself. That's fine. But what you have here, of course, are the main sections. You can add different sections to this if you want to, just by pressing this button here. You can relabel them, do whatever you want with it, and you can also delete them by using this function here. Now, within each of these folders, let's call them, of course, you have all of the clients. Now, these are imported from my Crunch account. You have your expenses. Again, these are imported from my Crunch account, and these follow the same labeling as they do in Crunch to make it even easier for you to distinguish between the different types of items that you've got. And then you have your employees. So this is where you put things like your salary. Now, one of the things that I would actually advise you do before adding, changing any of this stuff is actually to go to your settings, which you can find here in the top left. Now, when you originally import your data, you're going to have a screen that looks similar to this, although at the very top, it's going to ask you where you want that data to come from. Now, one of them will be a blank plan, so it'll be starting from scratch. The other, I believe, will be 0, and then just to the right-hand side will be Crunch. Now, you want to select the Crunch option, of course, and what you can then do is you can name the plan. This is just the default name. Leave it be if you want to. The plan start date and the financial year end is the two important ones. Okay, now, when you start to import that data, I would recommend actually leaving it as it is, because you want the last 12 months of information to be imported. You want that dragged across. If, for example, I selected back in April, it's going to go back to April and then import the data 12 months prior to that. Okay, now that's fine if you've got a Crunch account that is loaded with info, you've operated for a number of years, that's fine, do that. Synchronize it with your business year end, and likewise for sole traders, you can synchronize it with the financial year end. If, however, you're a brand new client and you haven't used Crunch for more than a year, I would recommend just leaving it as it is from the moment that you're starting the synchronization. Let it do its thing, at which point you'll be presented with this. And then you can always come back into here and you can adjust it to match up with your business year or financial year if you want to. Okay, now I'm going to leave this as it is for the time being, but that's just a little tip for you, and one that I'd recommend doing first of all, so that it's in alignment with your personal businesses. The next thing that I'd probably recommend taking a look at is the opening balance. Now, again, this is more important, I would say, for those that have operated for more than a year. So you've completed a year end already, you've got figures, perhaps you've got profit that you're bringing forward from last year and you want that in here. And that is going to be super important as well, because there's no point planning for something in the future if the figures are going to be incorrect, if they're not going to be accurate. So Michael, I'm going to swing over to you again here. Why would entering sort of opening balances, previous, things like starting cash, retained profit, accounts receivable, I believe is any money that is owed to you as well?
Yeah.
So what would be the important things to enter here, would you say?
Yeah, the important reason for having your opening balances obviously gives you your current starting position. So if you, let's just say, if you had £5,000 in the bank today, you would obviously know that any debts that come due today, you can basically pay off. Accounts receivable, your clients are going to pay you probably in the next 10 days or next 5 days, and the rest. That's basically, this software should help you project that if you're going to receive X amount in a couple of days, then you should be able to pay off your debts as they fall due and the rest. So opening balances are quite important because you're building up on a foundation. If you haven't got any opening balance, then I guess it's more like you're starting afresh. If a business hasn't done anything at all, and then let's just say you've only got the director who's basically putting money into the business, then it's acceptable, that's fine. You expect that will be coming from the director. But if you've already got stats from, let's say, your company year accounts and the rest, then that can be pulled through, and that basically forms the basis on which you can then model. I think the good thing about this setup is that because Crunch holds, let's say, historic data to, let's say, to the present date, if you start this, let's say you sync your data and then you're doing your cash flow projections, you are building it based on factual data, not something that's basically you just thought of in the rest. So that is a good starting point anyway. Most people who would do this kind of cash flow might just start picking up figures anyway, any number that they can think of, but it's good to have the historic, and that basically tells you whether your future projections could be reasonable. So assuming I did £10,000 worth of sales last year, and I think that maybe in the current climate, I could maybe do 5% more on my sales and the rest, that should put me at a different level compared to the previous year. And what if I could tighten a few, what do you call it, cost here, and then get rid of that and get rid of that? That basically is what we are talking about here. So the blend of Crunch and then Brixx makes it better in my view, because you're having both the past and the future all in one place.
Perfect. Yeah, and that's something that's obviously going to be really important. You want the real-time information, you want the actual figures themselves, and then of course the projection side of things, the forecasting side of things is going to be up to you to manually enter. So I think once you've set up these two things here, you're pretty much good to go when it comes to entering your forecast, your predicted figures, So why don't we just start doing some of this now then? So let's start with the sales side of things. Like I said earlier, this is a blueprint, right? So I understand that these figures probably, I mean, they could be the same if you've got recurring invoices, for example. If you have recurring clients, you charge them the same amount, etc. Then perhaps some of this you won't need to change. But in most cases, it's going to be unlikely that you're going to earn, you know, in my example, dead on 10,000 again. That's what I earned last April, but this has given me a blueprint to work off of. So let's say for, you know, like I say, if we keep an eye on this one here in September, of course, we're sort of mid-September now. So if I went ahead and said that actually I've done a job for this particular client. So if I go ahead and select this, this is now going to bring up a panel so that I can start entering figures, I can start adjusting them. The one thing to point out as well is that you can define this by, you know, different dates. If you've got a contract that's going to start and finish at an end time, you can adjust that up the top. You can also enter forecasts per month, per quarter, or per year. It's totally up to you. And this table option you can toggle on and off if you wanted to. Okay, so what that's now done is it's filled the rest of my information, but think of this bit here almost like an Excel spreadsheet. So if I were to remove all of this, and let's say from September, I'm going to start earning, you know, let's say I've got a contract that's 6,000, and then perhaps it's going to carry on all the way through. You can copy and drag that over. You can delete whatever bits that you don't need, of course, as well. You know, perhaps it's a 2-monthly job, and you can also copy and paste from cells. And it's also worth noting as well that if you do actually have an Excel document with any of this stuff on it, you can also just simply copy and paste and drag that over to here as well. So I'm going to pop those figures in. We've seen what that's currently looking like in the background. So if I now go ahead, save and close this, you'll see in real time it adjusts those figures for me, as well as also adjusting the figures at the top here as well. So cash in, cash out, and your net also. If I were to create a new client, let's say that, you know, let's hypothetically skip forward a month or so. Now I have a new client. I can just simply go to add a component. You get these options here, but the one you want for income for your invoicing is this one. You can name the client here. So I'm just going to go with Google for this one. Select them again, and you do this again. So let's say in this time, I'm going to turn that to table. Let's say in October, I'm going to make 3,500 from them. And then I also predict perhaps they'll come back to me next year, sometime in May. Save and close that again. You'll see then visually it automatically updates for you as well. Now, of course, for there's going to be different ways that you can use this. You can look at this as a sort of past and future reporting if you wanted to. You know, you could use that planned start date to change that if that's what you wanted to do. However, if you're only interested in things that are going to happen in the future, of course, you just leave it as the current date, and then you start planning ahead. Now, all of this is going to be predicted, so it is going to be manual in that respect. However, the real-time information that gets imported from your Crunch account is automatic. Like I say, that's just going to use the data that's in Crunch, and it's going to put it into the Brixx account for you. And you know, then you would look to change figures for maybe October, November, and so on. Another interesting thing that you can actually do with this is, let's say you've got any costs that are actually associated with the job that you're doing. So in this example here, I've actually attached material costs. So let's say I was I paid for some equipment that I needed to get to complete the job. So what you could do when you're entering the income is attach something called a linked component, which is going to be a cost of sale. So if I select this now, you'll see that adds another option down here. I can select what this is. Let's just say, I don't know, let's say they decided to actually pay for my fuel or something. You've got a percentage of the income, you've got units, and you've also got a manual entry. So that's if it's just a one-off. So I'm going to go ahead with manual. You can then change this to be monthly, quarterly, or yearly. So again, I'll do this as a one-off. So let's say it's going to be £75. I'll save this. And again, that's now been added onto that particular client for the period that I chose. Now, that can also be really important to help you understand, again, going back to should I be charging more for the service itself. It can help sort of separate your everyday expenses, so things like, you know, your general operating, your website costs, your marketing costs, everything like that. So it can help you understand, right, these are business essential costs, whereas these are actually costs associated with a particular job. Now, if for any reason you wanted to add a new group, similarly to the way that you'd add a new section here, you just go to add a group. Once you've done that, again, you'll be provided with this list of components as well. So the way that you actually build on this is very much, well, it is building blocks. It's almost like Lego in that respect. You know, you have your main categories here, and then you have your subcategories beneath those as well. Now I'm going to go ahead and just remove this one. The other thing as well, I think that I should show you is the expense side of things. So it's very, very similar in the way that we've just built this up here. So if I go to operating costs, as you can see, it's separated the expense type. So we've got use of own premises, insurance, transport, and so on. So if I now go into one of these, so let's say premises cost, it's the same in that respect as before. You know, you've got your forecasting table here. You can populate your different costs here. So let's say, right, so I've claimed for my use of own premises. Let's say I'm going to do the same again in November, something like that. I'll save and close this. And again, you'll see that slight adjustment there. Now, if I wanted to make something a bit more extreme, so let's say my advertising costs. So as you see, I've got that template from last year, but now we're in September. I'm going to increase my costs. So let's say 500. I'm going to drag this across here, save and close this. And again, you'll see it makes those adjustments for me. So this sort of visual representation can really help you start to shape where my money's going. Again, am I charging enough for people for my services? Michael, what would you say when you're looking at things like sales versus operating costs, for example? Why would having something like Brixx and having something visually in front of you be so beneficial as opposed to looking at things like, you know, balance sheets or cash flow numbers, reports, things like that?
The visual bits works better in the sense that if you look at a set of financial statements, you might just see two comparative years. Okay, so that sets the aggregated numbers and the rest. But the visual bits basically tells you that maybe if your sales are going down, and then let's just say your costs are going up, why should your cost be going up? The cost you're using to, let's say, run the business. So it's like you pay X amount to generate this revenue. So if your revenue is going down, then you probably expect that your cost should also be going down. So these are the kind of things that having something visual and then having lines, so let's say graphs and the rest, kind of maybe makes it sink in a bit more. You wouldn't get this by simply looking at a balance sheet or a P&L, because all you would simply see that is numbers, big numbers, and then basically, yeah, sales went down. That's it. But it doesn't tell you when the sales went down, or let's just say if you could see it on a monthly basis, or you could see it on a quarterly basis, that could probably inform your opinions a bit more. Okay.
Perfect. I mean, it's a good point, actually. Another thing that is worth showing on here is that while this is set up to be a monthly operation, you know, this will give you month on month on month visual representation. You can actually change this as well to be quarterly if that's how you prefer to see it, and you can also do yearly. So however it is that you operate and however it is that you want to use this, you know, you've got that functionality over there. I think a lot of people will use this on a monthly basis so that they can see the ins and outs on a monthly. You know, I think traditionally as well with sort of traditional accountants, quarterly is probably what you might be used to when it comes to things like you know, having that sort of phone call. How did I do last quarter? What's next quarter looking like? But with something like this, you can do all of this yourself. You can look at it quarterly, but certainly look at it monthly if you want to make those sort of regular adjustments and you want to see month on month how it is you're doing, and what decisions could be made to balance everything out and exceed your outgoings, and really increase the income into the business. Now, the last section I will show you very quickly is the employee section. Now, again, this is similar in some ways to how we separated the costs for doing a service on the income. Of course, separating your expenses. Now, your employees or as directors, you will of course be taking a salary. So in the employee section, under the employee staff wages component, you can adjust this. So if there's one director, you can put one. If there's two or multiple, you can put all of those in here. You can enter the salary that you're taking per year as well. And I'll quickly show you here. This has broken it down per year. Again, you can change it to per month if you'd like. You can also enter pension contributions if you're making any, and then of course the national insurance rates as well. Now this of course will impact things like this. This is where the cost breakdown comes into effect. As you can see, the staff cost outweighs things like my operating and cost of sales at the moment as well. Of course, using something like this will be able to help you understand, okay, where's my money going? Is there some things that I could do to change to make things better? What I'm going to quickly do is throw some wild scenarios out here at the moment, just again, so that you can see visually what this does. So if I say, right, I've got another new business now, I'm going to make one up here, another new business. So we'll use this per month. I'm going to flick it to the table again. And let's say this job is starting in October. So I've got the contract, I've won the business, it's due to begin. So I'm going to go, right, that contract now is for £5,000. So we'll go ahead, save and close this. Again, it's adjusted, and you can keep on doing this for any potential contracts as well. Now, of course, this is all hypothetical at the moment. If you've won the business, great, pop in, add it in, it'll adjust the figures. If, however, you're wondering different scenarios, if I were to earn X amount, what would my predicted income be then? You could simply name this as something, let's use it as this. And then I'm going to do as a monthly again table. And let's say by the end of December, let's say I've got 10 grand at that point, save it. And again, all of these figures visually change so that you can start really, seeing where your business is going and what changes you need to make. Now, if you want to delete these, same as before. So let's say, okay, I've had a look at that one, tick the little box next to it, delete it, and it's gone, and it'll automatically adjust to represent the real-time information that you've entered. Now, the next thing I will show you, again, bear in mind, this is the free version of the software. So when you go to the reports, you get a very, very basic budget forecast report. Okay, so what you're seeing here, this is what Michael and I were just talking about as well. This is probably what a lot of people will use, or try to use at least, to start having a look at, okay, where's my money going? What am I earning? Now, a lot of people won't like looking at this. I certainly don't. I mean, Michael, being an accountant, probably doesn't think it's that bad, but I personally would dread looking at something like this. Whereas actually, if I could just go back and look at something like this, to me, that's far easier to understand. So with the reporting, budget forecasting, for instance, this is all the figures that you are projected, what you're potentially looking at in the future. So again, Michael, why would you, one, would you actually prefer to look at this rather than what you were seeing on the dashboard? Is there anything additional here that you would gain that you wouldn't from the dashboard?
Yeah, with this one, you could actually see on a month-by-month basis how much is coming in and how much is going out. So you could tell in which months you have a shortfall and which ones are basically having a surplus. Okay, and you could see the final line as well tells you, it says earnings before interest, tax, depreciation, and amortization. So this is basically looking at your cash, actual cash movements. It's depreciation is the the use of, let's say, assets in the business and the rest. The assets would have been purchased probably 2 years ago or something. Accountants do what we call depreciation, which is basically reducing or spreading the cost of that asset over a period. But you can see in here that has been removed. Amortization is also linked to like goodwill and the rest. So this is simply telling you cash movements on a monthly basis. And you can see that I think the first month that will be struggling on should be December, because in December, you can see it's basically a negative there. January gets better, and then you're back to, let's say, having no cash in February and the rest. So seeing something like this should then advise one as to what can I change in terms of, let's say, the outflows to make things a bit better. Okay, so you could then look at what do you call it? In this case, let's just see. All we've got here is employees. You've got operating costs, but I guess that one you probably need to drill down and then see which one of the operating cost figures can be played around with, and then make things a bit better for the months you are going to struggle in.
Yeah, perfect. I mean, something like this, I would say, if you're, let's take travel and food, for example, you know, let's say you're spending X amount on public transport. Would you perhaps be able to use something like this to make a decision on perhaps using a company car, maybe using a personal vehicle and claiming mileage, things like that?
Yeah, because all you basically need to do is work out, let's just say, how many miles it will take you to get to your clients and the rest. If you then know that, let's say, it's going to be X number of miles, and then you multiply by the rate which you'll be compensated by, which is the 45p per mile, up to 10,000 and the rest, you then work out whether it's value for money to probably jump in your own car and go, or take public transport. There are certain things you obviously can't measure, things like strikes and, let's say, yeah, but on the whole, you could compare what it would cost you in terms of, let's just say, claiming mileage or going on the public transport.
Perfect. I mean, let's be honest, it's certainly going to help you make better decisions than spending £20 on a kettle to save £10 a year, isn't it? So there's always that as another way to look at it. So you've got obviously visual representations. You have a little bit of a bigger picture when it comes to drilling down things like budget reports. Now, it's worth pointing out that this is on the budget side of things. You will only currently have access to the forecasting element of it on the Brixx free version. There are, of course, actuals versus forecasts as well. However, as you'll see, this will prompt you to start a trial. Now, it's important to note that you can actually start a week's trial with Brixx. You know, there's no obligation, obviously, to carry on afterwards, but this will give you access to the more complex features like actuals versus forecasting. You'll have cash flow reports, profit loss reports, etc. So they're your basic fundamentals at the moment. So you can really start to use this already on the free version to help you look at your business structure, have a look at what you've perhaps earned in the past, have a look at what you're potentially looking at earning in the future, and start really making decisions around, like we've just said, public transport, for example, is one of them. You know, can I reduce costs here to increase my costs there, or do I need to actually start increasing the costs of my service altogether, just to keep it going? You know, as Michael mentioned earlier, if you haven't broken even already, that's definitely something that you should aim to do. And of course, then at that point, you want to keep exceeding that, going further and further and further. So I think for now, the only other thing that I could show you actually is if you were to adjust any of your information, say if perhaps you wanted to, you know, change your plan or start a new plan or something like that, say that you've got something here already. If you go into this section here and just jump to your plans, you'll then see the import here. So this plan, if you want to make changes to it, if you do want to start again at some point, just use the cogwheel and then you can remove that plan, and then you can restart again if you want. It'll ask you start a new plan, and then it'll actually ask you to resync your data again if you wanted to. So that's probably it from me for now, I think that's everything that we have to show you. Like I say, it's a really, really useful tool to get started. I would, it's free. So by all means, even if you just want to use this to test the waters for now, do with it what you will. Generate different scenarios, compare the past to the future, really start looking to shape the way things are going. Like I said at the start, especially now, I mean, this time, we've for Crunch especially, it's exciting because it's something that we've been looking for a long, long time, and Brixx are absolutely amazing with their support. The stuff that they want to do for their customers is very in line what Crunch wants to do and has been doing. So um, they're very, very open, of course, to making improvements. They really want to make this the best it can be for us as well as yourselves. So I'd strongly recommend giving it a chance, giving it a go, and seeing how it can help you and your business. So that's probably it for the time being. Of course, if you have any questions, if you want any additional help with Brixx, I think what we're currently looking at Crunch as well is if you do start using Brixx, Michael will correct me if I'm wrong, I'm sure, but you are able to actually book a phone call in with an accountant, and they will go through Brixx with you. So if you want to make sure, that you've set this up correctly, that you've got the things in there that you need to, is it aligned with your business year? Do you need to add any sort of operating costs, sales, things like that? Give us a call. If you're a limited client, a Crunch Pro client, call your accountant, have a chat with them. They'll go through it. And if you're a Crunch free client, there is the Ask an Accountant service where you can book an hours of someone's time, and then you can go through this with them as well. Now, Michael, I think you've done a few of these already with some clients. Is that right?
Yes. I think about 2 or 3 weeks back, we had our first trial and that went fantastic. So
Good.
yeah, looking forward to more. I was actually involved in the first one, but others have been working on it since then.
Brilliant, brilliant. It's also worth noting as well that if you don't want to book in time with people, and actually you just want to get on with this yourself and give it a go, there is going to be support materials. So on the slides that I'm going to send you all afterwards, there are links. So you've got the integration knowledge article. This just explains a little bit more about Brixx and what it does. The integration itself is explained on our website. And also Brixx offers a fantastic support center where you have walkthrough guides, you have tips and tricks, they have videos as well to help you get this set up and really deep dive into the nitty gritties of Brixx. And also it gives you, of course, more information about their higher paid for packages. So if you want, multi-year reports, if you want tax calculations so that your VAT and things like that are included. So again, you're able to then look at, okay, so after my tax liabilities, what am I going to be left with? All of that comes in with the Brixx packages. So I'd strongly recommend checking those out. But certainly, if all you're going to do for the time being is try the free version, that is the place to start. If you really like it and actually it's helping you, there is a free trial for the Brixx. I believe it's the essentials package as well. So you can start using things like the tax calculations as a little bit of a taster before you commit to the higher packages. Now, I think actually the pricing itself, it is on the website, but it's so cheap. I mean, in comparison to what you'd be looking at for something like this elsewhere, it's super cheap. I think it, again, don't quote me on this, I think it's about £9 or £10 a month if my memory serves me well enough. So, to have that security, to have that sort of, not a crystal ball per se, but to have the ability to act as if you have one, being able to look at money in the future, what you could spend in the future, what you could reduce in the future is super important. Again, going back to what I said earlier, especially given the current climate. And in truth, something like this for us, and I'm sure for you as well, couldn't have come at a better time considering what's been happening lately with the cost of everything. So I'm going to stop chewing your ears off now, but I do want to say thank you all very much for joining us today. I hope that you have found this helpful and informative. Any of the questions that you've written down and sent over to us, rest assured, they are going to be answered. I might have actually answered some of them while we go, but for any that I haven't, then I will certainly reply and get back to you as quick as I can. So a massive thank you from me. I wish you all the very best. And like I say, if you want to get started with Brixx, crack on. There's no better time to start than now. And I look forward to seeing you all in the next one. Michael, any parting words from you?
No, just thanks for tuning in.
Perfect. Thank you very, very much from me. Thank you very much from Crunch and from Brixx. And I wish you all the best, and we'll see you soon. Take care.